There is come by becoming rich.
Take all your money, buy Bitcoin.
You can wake up every morning and say GM.
GM. GM. All right, today is Thursday, 17th of October. This is daily levels. So, what are we looking at? Few things, keeping it really simple. On a price action basis, BTC has attempted to break out, or at least continue this upwards move. And we've seen Friday was a green day. Okay, so Friday, green during the New York session. Monday, green. And Tuesday, green, if we're taking it across here. Wednesday, which opened around here, closed around where here. Slightly green. Closed obviously with a green up candle, but was the first day to close with a false breakout. Right, so Friday, when we had the start of this push, from the open to the close, green. And closing above the highs. Monday, obviously same. Tuesday, same. Even with the volatility, Tuesday still closed above the highs at midnight. Wednesday didn't. So that's the first shift. Subtle shift. It doesn't necessarily have to mean much. This can just be consolidation. It's not like there's any major warning signs yet. I do expect a pullback. I do think this is in a process of topping, unless it can do something different to what I've been expecting. But so far it's moving just exactly as I'd expect it to. With, where is it? BTC, USD, I know where that path was. I don't know. Anyway, you'd seen the path. It'd been drawn out. We take out the lows, come through to the highs. I expected it to close above the highs. That was part of it too, because that's what gets the breakout traders coming in. That's what attracts the longs. And if it stalls out here and goes sideways, it's going to drop back. Question then is, how far does it drop back? So, assuming it does, I think it's going to go right the way back down. Many people will bid here. It'll probably do something like that, I would guess. Some attempt to rally from what looks like a higher low. But I do think it's most likely going to go all the way back down if we get below. But that needs it to break, 65 for that to become a factor. So the range that it's in, which is from Tuesday's low to Tuesday's high, remains the area to watch. Breaking out above that sets up a move to 69 towards 70. Nothing would change really in that case either. The market, as I see it, does have too much short-term positioning after a lengthy move. So moving further up today, breaking out today, would be a pretty bullish sign if you just have this one short consolidation day and then a further continued breakout. That would certainly be a continuation of momentum and lead to, looking at 70k plus. If not, then you're likely to see price drift back as there's too much positioning into these moves. The CME open interest is at, all-time highs, stuff like that. And then the ETFs. So most of what I'm saying here is what I said last night. I talked about this last night and was just ranting about people who are like completely delusional just because it suits their bias and their bags. I'm bullish. I'm long Bitcoin from 60k. My entire trading portfolio is long. BTC, spot. So I'm not shorting. I have no bearish inclination here for any, higher time frame or anything. But I see a lot of gloating and just the general consensus online on Twitter on YouTube, etc., 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 is prepare for the breakout. You should be long. Fuck the bears. Bears are going to get wrecked. There's going to be $18 billion liquidations. Hilarious. Impossible, right? I've talked about this on... This is just like engagement baiting bullshit. I talked about this on a weekend workshop a couple weeks ago. There isn't even $19 billion of total open interest for BTC. It's usually around, somewhere around the 20 mark. But even if there was, you could not have 19 billion shorts, that's just one side, to liquidate at one specific price. It's retarded. So anyone who believes that should not be considered an authority on anything. So when I see this all over my feed, when I see especially this stuff about people saying, you know, they type these like hypotheticals out. Oh, you think it's going to be another pullback. You sell the next low. You're sidelined on whatever. Like, who are they talking to? Because they're not sidelined. They're already fully long. And then everyone in the comments is agreeing with them. Haha, yeah, bears are fucked. Fuck the bears. Like, what bears? So much. There's a lot of herd mentality on crypto social media. Just crypto in general. But I don't really think that there's much of an appreciation for where are these actual bears? Do you feel bearish? Are you bearish? Do you hold coins? Are you long? Pretty much everybody is long. You don't have to have fucking 100x leverage. If you're just holding coins, you're long. Meme coins have been pumping for the last month. People are long. Because meme coins started pumping, everyone else is looking at what next to buy. So they're getting long. Sui went to all-time highs. It's not even a meme coin. So regular alts are moving too. And when Sui went to all-time highs, what people say, okay, what's next? And they start buying Aptos and all these other things. The last few weeks has been about people getting long. And so these bears that are supposed to be getting fucked, it doesn't show up anywhere in the data or anything. Are there people shorting? Sure, there always are. Is the market sentiment in general, the general positioning, short? No. Fuck no. Look at Bitcoin. Bitcoin looks absolutely fucking unbelievable. And everybody has 2 eyes and a TradingView subscription. So they all know this. Right? Nobody's missing this. Nobody's unaware of this. And so when you get these kind of moves, you're going to get this crowding. As people think, holy shit, we finally made it through all the bad times. Let's go. And when you see that coupled with stuff like this, which is CME open interest at all-time highs, right? There you go. And higher again. So, wow. I mean, just yesterday, that was at 11.59. Now it's at 12.21. So we've added another 600 million to CME futures open interest yesterday. And price did not move. In fact, it went backwards. If you look at IBIT, right? This is IBIT, which is what matters really for when we're talking about these US flows, because that's the US trading session. And so yesterday it was a red day. Tried to break out, pull back. And yet another 600 million has been added to OI. ETF flows have smashed in another 400 million. And I don't know how many times people need to see this. This is not... I wonder if somebody made an indicator yet. ETF flows. Daily spot BTC ETF inflows. Is it going to actually work? So many of these fucking indicators don't work. What's that showing? No. Doesn't seem to be. So anyway, let's do it old school manually, like I was doing last night. So here's all the tops on IBIT. So all the peaks for our summer period. And with the exception of this one I believe, if my memory serves me correctly. And I think this one, although I could be wrong with that. With the exception of those individual days, every other one of these had the same pattern. Very high inflows. And that's a relative thing. Higher than the recent trend of inflows. So you go back to the 13th, 14th, 15th of March. Sorry, 11, 12, 13. You had over 2 billion in 3 days. That was here at the top. 11, 12, 13. Over 2 billion, price didn't budge. That was the top. A few days later, on the 28th, we saw again, after a few days of outflows, we saw again, 26, 27, 28, 400, 200, basically 200. So another billion, give or take, 800 million. And it's the rate of change. They had started panic selling and dumping there a few days before, near the lows, and then, at the highs, buying back in. Top. Drop back. 8th of April. This one we actually saw an outflow, but the 3 days before that we saw inflows again. So there was an outflow on that day. Nothing's ever 100% accurate. Nor is this whole thing, by the way. This is still just a 7 or 8 or 9 data points, whatever, 7 of them. But until something changes, you should expect a similar result if the price action does the same thing. 21st of May and then the 5th of June. Look in and around those days. 21st of May and the 5th of June. 21st of May came off the back of what? A full week of massive inflows. 21st of May. Here. The full week of massive inflows pushed us from here. Up, 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 up. Then we topped. Right? And the 7th of June, did I say? 5th of June? 5th of June. Here. Another huge. Over 1 billion in 2 days. The 4th and 5th of June. Here, 4th and 5th of June, over 1 billion, top. The next one, I think, was an outflow day. 29th of July. No, it was inflow, but it wasn't big. All right, so going in there, I keep going the wrong way. We saw at this peak, though, 22nd, we saw massive flows. 19th and 22nd, we saw 1 billion cumulatively, just under 1 billion. And then on the second peak, we saw 100 million, not much. But the first peak around here, going in here, we saw 1 billion. The next peak, we saw a little bit of buying, but not much. So that's actually not. That should be in orange. That was not an outflow day. So again, high ETF buying near the highs. People still, I don't know what, I do know why. It's just for engagement, or they are just so bulled up and so long that they're looking for anything to try and bolster their idea of this being a magical, huge breakout coming right away. But the data they are saying, it's not me. I have no problem with ETFs. But I go on Twitter and I see whenever there's these big inflow days, people are like, ETFs are buying, BlackRock are buying, fucking breakout coming. But it's literally the opposite. 26th of August, around that, 23rd of August, 26th of August, in that area. 23rd, 26th, after a period, that's why it's relative is matters, right? Even though 200 million is not as much as the ones you see before, but the weeks before that, it was either negative or below 100 million. Then all of a sudden, we get towards a peak and it triples or quadruples. It goes from 60 million to 250. That's quadruples. Followed up by 200. What happens then? We top. 29th. We did have outflows that day. I did mark that one correctly. No. Sorry. Getting my 26th and my 29th mixed up. Exact top with the high inflows. Right? 23rd and 26th of August. Here and here. Right? Then the outflows start as it obviously flushes down. And then we come up in September, 27th of September, and we see huge inflows. Massive. Because throughout August and September, inflows generally were quite low. Some negatives, couple of relatively big positives, but then 100 million or less, and then all of a sudden we get 400 million and 500 million in 2 days. 26th, 27th. 26th, 27th, we pull back. So, then we go back to some outflows, some low flows, some outflows, Then we get up to our current peak, 11th, 14th, 15th. Friday, Monday, Tuesday, and Wednesday. We have 200 million, 500 million, 300 million, 400 million. We have 1.5 billion in these 4 days. Now, in 3 of the days, we had upwards momentum. So that's good, right? It's just like, and this would be the best case for it changing, right? I don't think this will go on forever, but I think it's pretty clear to see that the smart money don't wait until Bitcoin's already rallied to accumulate on the ETF, right? They don't wait to ape in with new inflows. It's much more likely that there's more short-term or dumb money or whatever that's aping these highs, and as it falls back and you see those outflows, other people are absorbing it, right? So when other people are panic selling on the way back down, the smarter money would be absorbing that. That would be my expectation of how accumulation should happen. Now, if you get continued price action strength, this can be different. Like we saw here, from like January into February into March. This rally all the way from basically 40k Bitcoin to 73 had high inflows all the way, right? From the January lows, bottomed out, then it was just inflows. 200 million, 200, 400, then 4 and 6 and 3s and 500s and 600s and 300s and 500s, all the way to we had that $2 billion in 3 days, and then it topped. So high inflows, it's just like anything. It's like open interest, it's like volume, it's like liquidations, anything. If price agrees with your data, then good. The problem is, I think that's uncertain at the moment, because we had high inflows and price went up, good. High inflows, price went up, good. High inflows, price went up, but sort of at least a slowing of momentum, right? A wick to the downside, a wick to the upside, but still green. Okay. And then yesterday, no green, red day. Mostly just like a sideways doji kind of candle, but still a red day. So for these ETF flows to not be the same as they have been before, which means they mark a local top, then you need to see price continue. You'd have to see more momentum that breaks through and holds at higher levels. If it does, great, excellent. If it doesn't, I don't know why people are out grandstanding and screaming all over Twitter about this being a bullish thing, because typically it hasn't been one. So traders, you deal with what? Probabilities, not certainties. And if you're looking at a very clear tendency that the market has had, which is high inflows mark tops whenever momentum doesn't continue, and actually high outflows come near the bottoms. Well, if we're seeing high inflows and markets rising, but sort of slowing momentum, it should tell you that unless something changes, it's probably going to do the same thing. So you've got that, coupled with massive open interest increases on the CME, which are an indicator of short-term positioning. Right, you see this over here, the CME. And where did I mention the CME all-time highs? Somewhere through here, you can read through it anyway. And, you know, I see a lot of this. I'm always looking at, I can hardly find, by the way, I can hardly find any bearish posts on Twitter, but there are some. Find the bearish posts and look at the replies. And that's where I see these kind of things. So someone posts a bearish chart about how the market's going to go down or whatever, and the replies are like, but bro, you're fucking have fun staying poor, good luck on the sidelines, ETFs are buying. Okay, we've just shown that that's not necessarily a good sign short term. Rate cuts, bro. I mean, what? Rate cuts do not have an impact in whether the market pulls back in like a 5 or 6 day period. And then elections. Like, what do you mean? Elections. Elections mean that Bitcoin has to continue pumping here right now when it's taken out some highs and is slowing. Again, doesn't make sense. It's not like saying that this is definitely going to crash or go to zero. It's like saying that when we had a 7-day rally that very quickly went from 59k to basically 69k, with massive increase of open interest, which shows short-term positions are chasing it, with a slowing of momentum, as you can see with these 3 pushes that are slowing down, into big resistance, 70k resistance is a big resistance, that you can't say, but bro, elections. The election's in November. And the effect of the election is felt mostly after it. So it's this not understanding the short-term leverage liquidity type of environment, which just simply means, do you think that everyone who's now aped in here above this high, would you think that would you feel like your position was safe if you entered there? Because like I said, I'm in from 60. I bought on FOMC day. I bought back in there. So I've got all my Bitcoin. I feel very safe in that position, right? Did that, came back, even had a retest, cool. If you just were buying here and you started to buy this breakout thinking this is it, this is time, why didn't you buy 60? Why didn't you buy 54? Why didn't you buy 58? Why didn't you buy 61? Why didn't you buy any of these? That's the question. You're talking about what's happening with the short-term position. The people who are most likely to be at risk here are what? People who've aped in at 66 or 7 or 8, but weren't buying at 60. We're afraid to buy 60 for whatever reason. We're afraid to buy 56 for whatever reason, which is fine, by the way. I wouldn't buy there. I waited for more confirmation. So the people who are at most risk are the ones who are exposed at this short-term point. And even a move as simple as this, just down below Tuesday's low, or down to this Sunday weekly open area, doesn't put me at risk. Yeah, sure, I take a drawdown, but 60k, I'm still in profit at that point. Probably doesn't affect any of you that are positioned from better places. Doesn't affect anybody who's holding longer term. It just affects people who are trying to tell you all over the place that this is mega bullish right now. It's like, but if you were so mega bullish, why didn't you buy 60? Why have you been buying? And you can see this open interest. You can see it in the positioning. You can see it. Why has there been such an increase? Why has there been so much buying here? Would it not have made more sense to buy here? The reason is, and I remember it when we were here and this wick was happening, and I mentioned about this being fairly normal, liquidity, we hopefully sweep it, come back inside. But when it was down there, the same feed, your feed at that point was, oh, we're going to zero, fucking 55k, 50k, 40k, whatever. So it was fear. Afraid to buy it there, feeling super confident to buy it here. It's typical nonsense. So, like I said, and I said last night, I'm not short. I'm spot long. I will absolutely short it if I get an opportunity. It's starting to look that way for me. I said when it came above that I expect a few days of consolidation above 67. And if it drops back, I think that a better trade comes from below this level here, because this is the level where all the positions got built. So basically 66.5 is the breakout point. I think below there, without a reclaim, you can see this move down towards 60 or even to these lows or whatever for some kind of retest. And if that happens, I will trade it on a shorter term basis short. This other path is still very possible. There's no reason why the market can't keep rising, right? It doesn't have to be that this is the absolute top. Because again, overall, higher time frame, I'm bullish. I just think that too much short-term money is chasing into these moves, expecting to try and catch breakouts, which just creates a higher tendency for breakouts to fail, at least in the short term. And so ETF flows would point that way. CME open interest as well as Bitcoin open interest would point that way. The general, meme coin and altcoin levels of excitement would point that way, just for short term. And the Trump odds as well. It's a very interesting thing. I wrote this whole thing down about the Trump odds here. And Trump's odds have gone they peaked at 60%. So from being down, from it being 45 Trump, 55 Harris a month ago, or 2 months ago, it went as far as 60-40. So that's a swing of 26%. Why has that happened? I've written down all the possible reasons there. But there's no doubt there has been a strong correlation between Bitcoin price and Trump's odds. Bitcoin is considered to be probably one of the best bets on the election. Because just betting on a binary Trump or Harris 50-50 prediction market is not really a great way to do it. So I don't think that whoever's done this 25 million, and it is one entity, there's a long thread on Twitter I saw where somebody linked all the wallets and showed that it's 99% certain that the majority of this recent very strong Trump only buying has been by one entity. Could be a person, could be a trading firm, could be whatever. And a lot of people have different theories. They think that it's the Republicans who are trying to make it look like Trump's ahead, so that, which by the way is kind of a weird thing, because Trump did better in 2016 when he was the underdog. And there's a saying, not even a saying, but there's a general belief that in elections, if you believe that your candidate's super far ahead and there's just going to be a landslide, there's less of an incentive to vote. And actually, if you believe that the person you really like, the person you want to win, it's neck and neck or they're even behind, you're more active to get out and vote. So Trump's odds being super far ahead could create complacency. So that's why some people think it's actually Democrats doing this to try and sow the seeds of complacency. Other people believe it's Republicans who are trying to make Trump look like he's way ahead in the polls and way ahead in the prediction markets, so that whatever, either, if they lose, they can contest the election and say, look, it must be rigged, it must be fixed, he must have stolen the election again, because look how far ahead Trump was. And also I've seen people saying that if Harris is behind in the polls, she's going to have to do more interviews. She's going to have to actually get out there and speak to people, speak to, all these places that she's been avoiding, and that will destroy her campaign because she's basically a fucking retard. All of these are like valid theories, but they are just that, theories. What's laughable is how people ignore, like, when it suits their bias, they use it. So Trump was behind, he had like 15% chance in 2016, and he ended up winning. And yet now that he's ahead, people are like, oh look, now the polls matter, now it's real. But wait, what about when he was way behind in 2016 and won? What about when he was ahead in 2020 and lost? So being ahead in 2024 is good? What? Like, it's cherry picking to fit whatever bias people have. Also, prediction markets are not a representation of the true odds. Prediction markets are based on supply and demand. Polls are obviously flawed as well, because you've all these issues with polling, such as who responds. The type of person that's more likely to respond to a poll, is that representative of the actual electorate? But there's no supply-demand dynamic with just regular polls. So assuming people are somewhat honest, the polls should be pretty accurate. Obviously, we've seen that they're not always. But a prediction market does not. Like, people are like, oh, you see, this has got people have skin in the game. They have money on the line. So this must be way more predictive. In what way? Who the fuck? Like, who has any alpha about the election? There is none. Who has insider information about the election? There is none. You're betting on a public vote. So it's not the same as seeing front running of a stock before earnings, or seeing front running on BTC before the ETFs. These things that genuinely have insider information, such as people knew the Bitcoin ETF was going to get approved before it got approved, people who know that a certain company is going to have good earnings or bad earnings or whatever, people who know maybe ahead of time what the inflation number is going to be or what the Fed are going to do. All of these things are prone to insider trading. There's no insider trading on a 50-50 coin toss election, because it could literally go either way. Why is Trump and Harris, why are they campaigning? If they were so fucking sure, if they had this insider, don't worry, it's all set for you. I mean, so people overplay the election odds. And it's funny because mostly Twitter, especially with Elon, it's very right wing now. So I saw none of this a month ago. A month ago, 2 months ago, whenever Polymarket was showing Harris in the lead, these people were dead quiet. Now they're sharing it everywhere. Look at this, Trump's going to win, he's going to smash it. And don't get me wrong, like, I think he's going to win. I think Harris is brutally terrible, like, just awful. I would still say I think that Trump will probably win the election. But that's not why these odds are moving. The odds are moving because of supply and demand. Somebody, one entity, has been aggressively bidding for Trump on this order. It's an order book model. There are bids and offers. So somebody wants to bet on Trump, and somebody takes the other side. And then they want to bet again. So his odds rise because they're going to get a worse price because they're trying to put more and more money onto him. And the only way that that could change is if there's enough demand for Harris to equalize the odds. But there isn't. This person with 25 million in the past 2 or 3 weeks pumping it in just for Trump. There is no equivalent amount of demand on the other side for Harris. And you can see this because something that's not related to supply and demand, like this Nate Silver guy, who people tend to think is pretty good at election forecasting. I think he did one yesterday and it was 50-50. That one's 49-46, has Harris ahead in the polls. I saw that there was one put out, which was like yesterday. I am almost certain it was just dead on 50-50. Maybe we won't see it here. Yeah, there we go. October 15th. Today's update. It's now literally 50-50. Right? So, and again, it's not like polls are accurate like that. But I'd say that's a more fair representation of what we all think. If you're being unbiased, what we all think is, yeah, it's probably a toss-up. So, one of the things, and I'm probably biased towards this because I'm a trader, is this, number 5 that I said, somebody manipulated a thin market to pump Bitcoin by proxy. We saw this with the Trump rally after the assassination attempt. Trump's odds skyrocketed and Bitcoin went from 53 to 70. Somebody within this, 2 or 3 week period has been aggressively bidding Trump up, and Bitcoin's price has gone all the way from 53 again up to 68 within this kind of last month or month and a half. And even if you take it just from the FOMC, the last month, it's gone from 60 to 68. And it's, as you know, Bitcoin trades billions of dollars every day. And it's not hard to build a 9 or 10 figure position. It's quite easy, in fact, given enough time, which there's been plenty, a month. So it's not beyond the realms of possibility that this actually is manipulating a easier to move market to create the impression that Trump is just going to landslide this so that people will then reflexively buy BTC because that's one of the best election bets because he's the pro-crypto president. And then you profit on your massive Bitcoin position. So a lot of interesting things there. I think that these odds will come back into line because this is just purely supply and demand. So the odds here will come back into line almost certainly. Because once this person, which got now to 60-40, once this person has finished, unless they continue to just buy, which they could, maybe they put another 25 million and just keep fucking, maybe it's Elon and he's just YOLOing in because he's gone fully in on Trump. But as it gets closer to the election, these odds probably will converge because there won't be enough demand to buy Trump at 60% and enough demand to sell Harris at 40%. Again, nothing to do with who's going to win or not. This is a bettor's market. It's about expected value. Is it a good bet to take Trump at 60%? Probably not. So just purely from supply and demand, it's like Trump is overbought at the moment and it probably drops back. And Harris is a bit oversold and probably it converges back to 55-45 or whatever. And so if that happens, you see this contraction in the odds, well, that's going to change again people's opinions because they're overly reliant on this market that clearly can be moved by one person. And then people mention about, that the most retarded take ever is they show other prediction markets and say, but why? Look at the other prediction markets. They're also showing Trump ahead. Arbitrage. I mean, come on. If Trump's odds are 60% on one prediction market and they're only 50% on another, you can buy the 50% and sell the 60%. I mean, it's fucking like basic arbitrage. So those will converge. The biggest market will move the others. It's just this really simple stuff. If Bitcoin's price on Coinbase was 60K and Bitcoin's price on Binance was 61K, you should be buying as much Bitcoin as possible on Coinbase, sending it over to Binance and selling it immediately. It's literally just called arbitrage. It's probably the most prevalent thing in all markets, convergence. That's what every market maker tries to do. That's what every pairs trade is about. You long one, you short the other. You're trying to play convergence. And if it's just a mispricing, you buy in one area, you sell it in the other area. And that's why Bitcoin's price is not 61 on Binance and 60 on Coinbase. Because if it was even remotely close to that, it would be snapped up in an instant by these billion-dollar funds that are waiting to capture that. It's free money. So that explains that part. And anyway, all that being said, Bitcoin currently is fine between 65 and 68. But if it continues to consolidate around here, I think it's more likely to drop back. If it doesn't, though, within a reasonable time frame, if you see it just holding nicely between 67 and 68 or whatever for 2 or 3 more days, it's probably going to go higher, right? Consolidation, if it continues above the highs and shows no attempts to break lower or attempts to break lower and they hold, that's going to be bullish consolidation. It's not like it can't go higher. It absolutely can. But currently, I think it's more likely to drop back. Depends now what happens in today's New York session, because we've seen Friday bullish, Monday bullish, Tuesday bullish, Wednesday sideways. So we'll see what Thursday holds. And that is that. That's a long one. So GM. Big altcoin request stream today, 4 p.m. UTC. Get your requests in. I'll open up the channel at 3 p.m. You can request any altcoin. If people vote on it, I will chart it. See you then. GM.